London AIM and Toronto venture-listed Cornish Metals is on a mission to bring mining back to the South Crofty underground tin mine located in Cornwall. The mine closed in 1998 after a 400-year production history. Fawzi Hanano is the Chief Development Officer and he joins us now. Welcome.
Thank you, Jeremy.
We've spoken before. Your story is relatively well known, and it has a romantic element to it as well as a real serious business element to it. Where are you with this process of bringing the mine back? Just update us.
So I'll give a bit of background and to give some context on where we are. So, the company acquired this asset in 2016 out of administration, and since then we've been working towards bringing it back into production. What really allowed us to move things forward at pace was a fundraising we completed in 2022, in which Vision Blue Resources came in as a strategic shareholder, anchoring a £40 million raise, putting in 25 million. With that allowed us to build a water treatment plant, commence the dewatering activities of the underground mine. We also completed metallurgical testing, completed a preliminary economic assessment study, as well as updating the mineral resource. So that's been ongoing since then. And then we had another bit of a boost earlier this year, where we completed another fundraising in March of this year, where we brought in a second strategic with the national government, National Wealth Fund, came in alongside Vision Blue Resources, anchoring a £57 million raise, which has allowed us to keep the momentum going on surface, underground, to really go towards our goal of restarting tin mining production at South Crofty in mid-2028.
Yeah, this dewatering thing is a big thing for any mine that's been idle for so long. How deep are we talking about? How far through that process are you?
So we're now about halfway through. We are currently at the mid-pump station, which sits at 360 meters below the surface. We are currently in the refurbishment stage of that pump station. That's well advanced, where we're currently we've lowered the new permanent pumps and we're mounting them in place currently. So that's well underway. Our guidance is to get down to, if we talk in old language, 400 fathom level, which is about 730 meters below surface, to get dewatered to that level by the middle of next year.
And of course, there's an ongoing cost then, of course, to keep the thing free of water, which is a cost obviously we have to consider as investors. Are you on track, do you think? I mean, there's been this idea, I think, of getting the mine up and running by 2028. I think that was the latest date I saw. Is that still in place?
It is in place. We updated our guidance in July of this year, and all the activities we are doing right now are on track with the guidance.
Yeah. Remind us why the mine closed in the first place. Here we are now sitting in 2025 with a record, hopefully, of getting it up and running economically, obviously, because you talk about the PEA that's been undertaken. Why did it close, and what's changed to enable us now to look at this visibly as a business, an ongoing business?
Well, a lot has changed, and the reason why it closed was not because the mine ran out of resource, but because of pricing. So in the mid-1980s, there was a collapse in the tin price. And at that point, pretty much every hard rock tin mining operation closed within a few years because they were no longer profitable. South Crofty kept going for 13 more years up until 1998. So that really demonstrates the low-cost nature of this deposit and this mine. It is a very high grade, being one of the highest grade mines in the world. But then eventually it did close. It wasn't, it was barely breaking even at that stage. Tin prices were in that $3,000 to $5,000 per ton. Now, what has changed in the tin market quite significantly is in the early 2000s, the EU mandated a ban on the use of hazardous materials in electronics. And that meant there was no more use of lead as solder going into the electronics. So essentially that doubled the end use for tin overnight. And it took several years to clear through inventories. But now when you look at the tin end use, historically it was mostly industrial applications, alloys, tin plating, glass making, that sort of thing. And that was the whole end use. Now we see that solder occupies more than 50%. So that means that tin has become a future-facing commodity. Its applications are pretty much anything electronic where there's an electrical connection, you need tin. So it's essential for our modern life. And it's also essential for renewable energy. When we look at solar, for example, solar is one of the largest users of tin, with about 10% of all tin used, where it is a copper wire coated in tin solder that connects the panels. So it just shows that tin is something that is essential. It's probably undercovered by the market, and people don't recognize the importance that it plays in our everyday lives, in our mobile phones, tablets, computers, everything. And when we talk about pricing, I mentioned prices in the 90s were in the $3,000 to $5,000 per ton, where yesterday's close was over $37,000 a ton. And South Crofty is expected to remain a lowest quartile producer, where in the PEA we mentioned an all-in sustaining cash cost of under $14,000 per ton in the first 5 years of operation. So you're looking at upwards of 20,000 of EBITDA margins.
And of course, the thing is, I suppose in the last 27 years or so, you've got technology on your side. I'm guessing that mining has come on a long way in that quarter of a century. Plus the fact, obviously, as I say, pricing is obviously a big factor here. What are you using now in terms of tech to help you and reduce that cost?
So clearly technology is going to be helping. This was a lot more manually driven mine. It was on tracks. We were looking to modernize the mine as we bring it back into production to be a mine of the future. It will be trackless and more mechanization to be used. So that's going to be quite important. But if I single out one element of technology that has helped, that hasn't been there previously, that we'll be utilizing in the flow sheet of the operation, is ore sorting. So we're going to be using X-ray transmission ore sorters at the front end, so on the pre-concentration side. And essentially what that does, it allows us to reject the waste material before it goes into the concentrator. And we're looking at about 50% waste rejection. So that means less power use, right sizing of the concentrator plant. So when we're talking about 500,000 tons of material being hoisted up the mine, only 250,000 tons approximately will actually go into the concentrator plant.
Whilst obviously you have technology on your side, in the last 27 years as well, I'm guessing that the safety bar has been raised. I imagine the regulations have come in, which means it is actually more expensive to undertake the project like the South Crofty mine. What are you looking at in terms of that in order to ensure people's safety? You talk about mechanization. I mean, I'm assuming that also includes the fact you'll be using less personnel than had been used in the mine as well. So just round us off as well on that aspect of it in terms of the cost to deliver the end product.
So just broadly speaking, I just mentioned a cost of about $14,000 per ton. We were breaking even when the costs were down at less than $5,000 a ton. The price was less than $5,000 a ton. So you can see that costs have gone a long way from where they were previously, but we of course will remain profitable, and more so now given that prices have moved a lot more north. Now, health and safety and environment, these are extremely important for the company, and you cannot run a mining operation without putting these right at the forefront. So, we have a team in place, in the operation side and the project side, where health and safety remains, paramount in terms of monitoring this and putting the right systems in place to ensure the safety of all of our personnel, direct employees, as well as contractors and anyone who does access the site. And we've had, if we look at our records this year, we haven't had any lost time injuries reported. So that also talks to us adhering and monitoring our health and safety track record here. The
product tin itself is now widely regarded as a metal that is part of the energy transition that we're all going through at the moment, which is good. Obviously, it's something, as you've explained, is something now which is used. It hadn't been used 27 years ago in that way. But my also understanding is that there is now a lack of any production, I believe, in Europe, and I also believe in America. Is that correct? So you're actually producing something that's going to go into potentially a really big area of demand. What are you able to supply, and what is the demand likely to be?
So when you look at tin, and it's very similar to a lot of other critical minerals, there's a very high concentration of supply. For tin, for example, we are looking at about 2/3 of supply coming from Asia, where China plays a central role. That's from mine supply. When we look at refined supply, we're looking at about 80% that come from Asia, with China having more than 50%. So it is very important that Western countries look at securing their supply of tin and obviously other critical minerals. And we're seeing a lot more action being taken by governments in terms of looking at ways to secure supply from other nations for commodities that they do not produce locally. So when you look at the current production profile for tin, you're correct. There is no primary production of tin in all of Europe, none in North America as well. There is some recycled production mainly from e-waste elsewhere in Europe. So in Belgium and Poland, I believe it totals about 15,000 tons annually of a total demand for Europe of 45,000 tons. So you could see there's still a massive gap. That needs to be imported. The majority of that will be imported from Asia as well as from Latin America, where you do have refined production capacity, mainly in Peru. But that leaves the countries susceptible to supply shocks. And we've seen a lot of that. Now, when you look at the broader market, tin currently is about 380,000 tons total in terms of the end-use demand. Our mine, we expect to come online and produce about just under 5,000 tons of tin in concentrate. So it's not huge relative to the overall market, and it will not satisfy the total demand, but it will be sufficient to satisfy at least bringing some more security of supply. But there's also one other thing that's worth noting, that while there's no mining within North America and in Europe, in Europe there currently is no refining either. So even though we will be producing the concentrate here in country, there's no home for it to be refined. So it will have to leave our shores to be refined before tin can be returned for use further downstream.
And where does that go? Where is the refining undertaken?
So currently, there's capacity for refining in Asia, in Thailand and in Malaysia, particularly. And these are where smelting was taking place for our product back when the mine was in production. But it is something that would be desirable to see further downstream processing capacity within Europe and the UK.
That's an irony, isn't it? We've got here a metal which is considered part of the energy transition, and here we are now with a product which has a lifespan and a lifeline which goes over, one would expect, a reasonable carbon footprint. You're looking at finding ways to do this broad, which seems to me to be crazy. Do you think there will be an opportunity to refine here in this country?
I believe there will be an opportunity. What the biggest challenge to bring refining to the country is the cost of energy, because smelting operations are energy intensive, and so there need to be a more competitive cost of power for this to become more competitive with the rest of the world. Because we're looking at smelters being built, for example, in North America, where they're getting long-term price agreements that are a fraction of what we are currently seeing in the UK. And that's actually consistent in Europe as well. So I think there's a lot that needs to be done in terms of securing lower cost power to make new smelting operations competitive.
You had some numbers out this morning. As we said off camera, they're pretty meaningless because you're not revenue generating, but it did give us some little insights into several things that I think it's worth talking about. I think this government funding thing is interesting. You spoke about it, the national fund has contributed to this. How did you apply for that? How did you end up with the amount that was given? It's about £28 million, wasn't it? Is that because it's all part of a proportion of CapEx? How was it decided that it would be that amount of money?
Well, there was dialogue for some time with the National Wealth Fund, and they at the time had a criteria of, I believe it was a minimum investment size of £25 million, and that there needs to be crowding in of other investments. So there has to be matching of investments coming from other parties, and so that's what we ended up with. We had a close to £57.5 million raise, of which NWF put in about half of that at 28.5. So there's no magic to it. There is a minimum bar to come in there, which does pose a challenge to some smaller companies. But I believe that there have been changes in the requirements at the NWF.
Will you have to come back to the market for more money before it starts to produce with a hope for date of 2028?
Yes, so we outlined a new capital figure in the PEA that we released on the 29th of September of £198 million, and that we are currently underway with the debt financing process. We have engaged Endeavour Financial to lead that process with us, and that's moved into the second phase now of due diligence now that we've got the updated figures. There's been a lot of interest generated from multiple different parties, including commercial banks, credit funds. We're looking at Nordic bonds as well as traders who are expressing a lot of interest there. So we'd hope to have this process completed by the end of Q1 of next year. And then with that will allow us to do a final equity piece to close out the project financing and announce a final investment decision for the project to take it forward to production in 28.
We're talking about tin primarily here, but my understanding is that the reports that you've had have disclosed other metals along the way. Are any of these at a level which are a serious amount to be able to benefit from mining those and looking at those as separating them out from the mine material?
So when you look at our current mine plan, the initial focus is going underground into the granite, so in the deeper levels, where it is only tin and very high-grade tin at about 1.5% average resource grade. In the upper levels, which would be the first 400 meters or so, that's in polymetallic rock, where it's tin, copper, and zinc. And the current mine plan does show that we will be bringing in later years your copper and zinc production as well in smaller quantities when we go into the upper mine areas. Now, the focus will be, like I mentioned, on the lower mine because it is more profitable, it's high-grade tin, and we'd expect that we most likely will last longer in the lower mine before we move up to doing works in the upper mine. But that's something that is dynamic and we'll evaluate. It's obviously depending on pricing of the different commodities. But focus on tin, but there will likely be some copper and zinc byproducts as well.
And do you think this will enable you to expand outwards, bigger mine, other mining geographies within Cornwall, perhaps maybe that you've got your eye on? What's the future opportunity for growth?
I think it's immense. Just like you opened this conversation with the mine having been in operation for about 400 years. So that's a very, very long time. And the lower mine, the tin only, has been in operation since about 1906 or 1907 when the shaft was sunk. So we believe that it's not only a 14-year mine life that we'll have as we published in the PEA, that is constrained by the last reported resource. This mine has a very solid track record of replacing what it's mining. And we show in our presentation a 24-year history of production and mineral added to resource. And it basically states that in 1974, the mine had less than 4 years of mine life remaining. 24 years later, we had closer to 5 years of mine life remaining. So I believe we'll be in the same situation here, where we say we have 14 years of mine life, but we are going to support this through a drilling program, which will allow us to continuously upgrade and replace what we're mining. And we expect that there is a huge potential to extend this into the decades. So it will become a very long life, multi-generational mine as it was previously. And that's just looking at the footprint at South Crofty within the underground mine license area. And that occupies about 1,500 hectares of surface. We also have 15,000 hectares of exploration property within Cornwall. And we will be looking at these in terms of ranking exploration targets to go and explore further in the future. So there is a lot of potential, one, to extend what we currently have just at South Crofty, but also for this to play as a bit of a hub and spoke model for other potential assets within Cornwall.
You've spoken about the support you're getting from national government. What about local government? I know from anecdotal evidence that Cornwall has high unemployment levels. It hasn't had mining for a long while. I'm guessing you're not drawing your expertise in mining from the local community, but I'm guessing you're getting a lot of support from local community because I imagine you are going to be a relatively large employer. What is your relationship like with local government?
We have a very good relationship with the local government and with the local community. I'll first talk about the local government. They've been supportive along the way as we've been talking about bringing this mine back into production, whether it be the local council, the environmental agency, that have been supportive in terms of getting us to move forward, having the permits. One thing I didn't mention initially is we do have an underground mine permit up until 2071. We have all planning permission in place to build the surface infrastructure for the processing plant, the paste backfill plant, everything to get this up and running. So that obviously demonstrated that there was support, and this is usually a risk factor to other operations coming into production. But just to outline a couple of other areas. We are currently building a new workshop and stores facility at the surface at South Crofty. This is being part funded by the Shared Prosperity Fund, which is the UK Shared Prosperity Fund, which is managed by the Cornwall Council. And we were awarded a grant earlier this year of up to £4.2 million, which equates to about 62% of the total. So that is quite a large amount, and I believe that's the largest grant funding awarded through the Shared Prosperity Fund. So that does demonstrate that there is quite a bit of alignment and support from the local government. And one of the important areas there is, of course, local regeneration and job creation. And we do expect, when this mine is in production, to generate upwards of 300 direct jobs and over 1,000 indirect jobs, as this coming into production will then generate secondary industries around there. We would want to have maintenance services, that sort of thing, from companies that are nearby, not at the other end of the country or outside of the country. So that's going to be quite important. And our focus has been, up until now, to prioritize local hiring. And when you look at our current 80 plus employees, the vast majority have been hired locally. But we also do acknowledge that it is a challenge to hire for certain roles because the skill isn't always there, because mining has been absent. There's a lost generation of mining. You have the Cornwall School of Mines that's generated a huge number of very well educated and skilled mining engineers and geologists who couldn't find work here and have been forced to leave the country and go to Australia, Latin America, South Africa. But we believe that we'll be able to attract some back, and we've done that. For example, we have several of our more senior members of the team who have either relocated here or have returned home, who have left here for job opportunities and see the attraction of coming back to their origins.
One final question about the local community. Mining is a relatively dirty sort of environmental issue for some. Do you have much opposition to what you're trying to do? Clearly there's a lot of upside for the community. I guess you can try as much as you can to contain what environmental impact there is. Is there much you're finding opposition or that you're being exercised in your ability to be able to increase the PR locally?
Well, what I can say is, of all the mining operations that I've been involved with, this is the one where I've seen the most support. And you'll be hard pressed to find opposition against this mine. The support comes from multiple reasons. Obviously, there's that nostalgic historical context of mining within Cornwall. There's the desire for job creation and what that will do economically to the immediate region. But when we talk specifically about the environmental impact, this is going to be an underground mine with no surface tailings. All tailings will be paced and backfilled into the voids underground. So a very small footprint overground. But if I give you a specific example where the local community have been able to see the direct impact, as we talk about dewatering the mine, historically this mine would just overflow and drain into the river. And it's called the Red River for a good reason. The water was very, very murky. Since we started the water treatment plant, and now we're pumping the water out of the mine, it goes through the plant, fully treated water now is being discharged into the river. And now you look at the river, it's crystal clear water. So that is notable by the local area. And there are some NGOs that actually we are working alongside in terms of doing further activities to clean up the riverbanks and that sort of thing. So we've demonstrated a positive impact. And we are also looking beyond that. When you look at the water underground, deep underground, it's at a constant, say, 24 degrees all year round. So we're looking at harnessing that heat to generate heat for our own building. So we're going to be using the new workshop and stores as a test bed, and then we'll see how we could expand that further. So we are looking at how we can harness what we already have and have the lowest impact environmentally.
We spoke briefly about the numbers out today, the fact they weren't really meaningful in any way, shape or form. One thing was highlighted, which I know we already knew about, was this intention to delist in Canada and focus the listing just in London. My understanding that is going to be the case. What's brought about this decision?
So Cornish Metals has its origins in Canada, originally called Strongbow Exploration. And it's around 2015-16 when strategy changed in terms of the commodity exposure, and that's where South Crofty came into the fold, and the focus really became to advance the South Crofty project. We listed on AIM in 2021, becoming a dual-listed company, and changed the name from Strongbow to Cornish Metals Inc. At that time. Now, we look at our register. The majority is comprised of UK investors, shareholders. Liquidity is also majority on AIM rather than on the TSXV. And just to mention, we did make a commitment to the National Wealth Fund when they came on as an investor that within 1 year's time, we would re-domicile the company from Canada to the UK, which aligns us with our current strategic focus on bringing South Crofty into production. So the materials are out in the public domain. We expect that this transaction will be completed in mid-late December of this year, which will then form Cornish Metals PLC, listed only on AIM, and we'll be changing the ticker from CUSN to TIN, TIN.
Lovely. One final question, and it's always about the outlook from where we go from here. As the Chief Development Officer, what can you tell us about milestones you hope to see struck in order to prove to investors you're on track to get you to that all-important production in 2028?
I think there are going to be a lot of milestones that we need to demonstrate. From an operational perspective, we need to demonstrate the ongoing work that's tracking progress for the excavation works that we are underway now and starting phase 2 in the coming weeks, if not sooner. Dewatering, that's something that's always brought up, and we've talked to getting to that 400 fathom level by the middle of next year, so we'll need to demonstrate this milestone as well. But it's not only that. As we dewater further down, there are various levels that once they are dewatering, we have access that will allow us to start development at these levels as well. And what we are doing right now, this month, we are commencing underground development at the number 1 level, which is at about 45 meters below surface. And the reason why we're doing this now, we've brought that forward compared to the previous plan, is because this would become the testing ground, the training ground for our employees, for underground miners, who will then demonstrate and be skilled up there before we send them lower down. And this is going to be essential, so we expect to start that this month, and we'll be able to then use that as evidence of our capability and what to be replicated further down as we go down. Now, non-operationally, it's all about financing. So when you look at any project, two of the biggest challenges and risks are execution and funding. And of course, permitting is another, and community support, which we have, which is good for this mine. But on the financing side, we would want to announce by the end of Q1 that the debt financing is secured from a senior debt perspective. And that would allow us, alongside various milestones operationally, we hope to continue to demonstrate the capability that we have to stick to the schedule and that we remain on track. So investors are confident to put more money in to see us through to 2028.
Well, wish you luck. It's great to see a business success.
Thank you, Jeremy.
All right, so that's good. That's Fawzi Hanano, the Chief Development Officer at Cornish Metals.